Hi, everyone, and welcome to Chapter 3. This is a Cengage Managerial Accounting, and we are in Chapter 3 this week, which we will look at process costing. Now, the previous week, we talked about job order costing, how the costs are accumulated by the job that is being completed. With process costing, we handle it quite different. So with a process manufacturer, they're going to produce products that are in bulk and are pretty much indistinguishable from one another. Process costing is the method of costing used by these manufacturers. This system records the product cost for each manufacturing department or for each process. Job order costing records product costs for each job, and they use job cost sheets. So you see here in this Exhibit 1, the type of companies that use process manufacturing and the type that use job order, the job order costing. So for process manufacturing, we're dealing with soft drink companies, aluminum. Alcoa makes aluminum. Intel makes computer chips. Apple makes the iPhone. And Hershey, we all know, makes the chocolate bar. So you see the type of products that flow through process costing are pretty much indistinguishable from each other. With job order costing, you see companies such as Disney when we're talking about movies, or moving services, golf courses, mobile homes or home builders, and then advertising companies. So you see how they're just quite different. Process and job order costing are similar in that we still record and summarize the costs of the products, and we classify the costs as the direct materials, the direct labor, and the factory overhead. These are the same on both sides. We allocate factory overhead costs to products, and we can use a perpetual inventory system for materials, the work in process, and the finished goods. Both provide valuable information to help those in the company make decisions. But they're different also in many ways. To look at the differences, we're going to look at two companies. So in this scenario, we're going to look at Frozen Delight, and then we're going to look at Legend Guitars. So we've kind of talked about Legend Guitars previously, and they use the job order costing system. They will possibly make 5 of one specific kind of guitar and a few of another kind of guitar, but they keep the cost calculated by the job. So you see the direct materials, the direct labor, and the factory overhead go into each of the jobs, and they keep those costs uniquely tied with a job. You see with Frozen Delight, Frozen Delight keeps track of the cost per the process or the department. So in the mixing department, they're going to keep track of the costs specifically for everything that goes into the costs that go into just the mixing department. Then, when the product moves along to another department like packaging, then all the costs that are put into that specific department stay within that department. So instead of by job, we do it by the process or the department. Frozen Delight records the cost of making ice cream in the work in process of accounts for the mixing and the packaging departments. The product costs of making a gallon of ice cream can include the direct material costs, such as the milk, the cream, the sugar, the cartons that they use to pack the ice cream in. The material costs are added at the beginning of the process for both the mixing department and for the packaging department. The direct labor costs, which are incurred by employees in each department that run the equipment and load and unload the product, are calculated in each department. The factory overhead costs, such as power and depreciation, are also allocated by the department. So in the mixing department, the direct materials in the form of milk, cream, and sugar are placed into a vat. And an employee fills each vat, sets the cooking temperature, and sets the mix speed. The vat's cooled as the direct materials are being mixed by agitators. Factory overhead includes equipment, depreciation, and indirect materials. In the packaging department, the ice cream's received from the mixing department in a form ready for packaging. The packaging department uses direct labor and factory overhead to package the ice cream into 1-gallon containers. The ice cream is then transferred to finished goods, where it's frozen and stored in refrigerators, or I should say freezers, prior to shipment to the customers. Now, as shown here in Exhibit 4, the mixing and packaging departments have separate factory overhead accounts. The factory overhead costs incurred for indirect materials and depreciation and other overhead are debited to each department's factory overhead account. The overheads applied to work in process by debiting each department's work in process account and crediting the department's factory overhead account. This illustration shows how the mixing and the packaging departments have separate work in process accounts. Now, each work in process account gets debited for direct materials, direct labor, and the applied factory overhead. Also, the work in process account for the packaging department is debited for the cost of the units transferred in from the mixing department. So each work in process account is credited for the cost of the units transferred to the next department. The finished goods account is debited for the cost of the units transferred out of the packaging department. The finished goods account gets credited for the cost of the units sold. Then, as we know, that will be debited to the cost of goods sold account. So let's take a look at an example here. Here, exercise 3.2. Alcoa is the world's largest producer of aluminum products. One product that Alcoa manufactures is aluminum sheet products for the aerospace industry. The entire output of the smelting department gets transferred to the rolling department. Part of the fully processed goods from the rolling department are sold as rolled sheets, and the remainder of the goods are transferred to the converting department for further processing into sheared sheets. So here we're supposed to prepare a chart of the flow of costs from the processing department accounts into the finished goods accounts and then into the cost of goods sold account. And they give us the accounts that we are supposed to be using. So we'll have a cost of goods sold. We've got materials. We've got factory overhead for the smelting department, factory overhead for the rolling department, factory overhead for the converting department. We've got some finished goods for the rolled sheets and sheared sheets, and then work in process for the smelting department, work in process for the rolling department, and WIP for the converting department. So here is a great example of the flow. The materials first are taken out of that inventory, and the materials are added to the work in process for the smelting department. Also, factory overhead gets applied to the smelting department. Once that process is completed, the work in process smelting department is credited, and the whole amount then goes into the WIP for the rolling department. Factory overhead for the rolling department is applied. Once that process is completed, then there will be two things that can happen. One is a portion of that rolling department goes into finished goods. And then when those finished goods are sold, then they get credited out of the finished goods for the rolled sheets and go into cost of goods sold. But then also a portion of that WIP in the rolling department moves on to another process called the converting department. That converting department then gets debited with factory overhead applied to the converting department. When that process is completed, then that will go into the finished goods for the sheared sheets. And when those sheared sheets are sold, that portion will also then go into cost of goods sold. So this process are these specific aluminum products can stop in the rolling department, and then some move on to the converting department. Now, the cost of production report is the next thing we're going to talk about. And it really summarizes the production and the information for costs for each department. We're going to have the units the department is accountable for, and then how they disposed of those units. We're also going to show the product costs incurred by the department and the allocation of those costs between the completed product and then the partially completed units. So as each process is occurring, there are going to be at the end of the month some of these processes that are still work in process. They are not completed. So we need to know how much was transferred out and how much is still in WIP. A cost of production report has 4 steps. We're going to determine the units that are going to be assigned to cost. We're going to compute equivalent units of production. We're going to determine what the cost is per the equivalent unit. And then we're going to allocate the cost to the units transferred out and to those that are still partially completed in WIP. Now, by preparing a cost of production report, the cost of the gallons transferred to the packaging department in July and the ending work in process inventory in the mixing department are determined. These amounts are going to be indicated by the question marks. So here you see the direct material costs for the 5,000 gallons, the conversion costs for those gallons that were 70% completed. We've got, actually, I should say, they were 70% completed at the beginning of the month. So they have to finish the 30% of what needs to make them completed. So then we show what we started with, the total amount that we started the month with. We then add any direct materials for July and the direct labor and the factory overhead. And so we've got our total production costs. Now we're going to have to break down how much of those gallons, 62,000 gallons, were transferred to the packaging department, but we still have some work in process as of the end of the month that show that 3,000 gallons were 25% completed as to the conversion costs. So we need to be able to break down those costs so we can flow the goods. So the first step needs to be to determine the units to be assigned the costs. So a unit can be any measure of completed production. We can show it to be tons or gallons or pounds or barrels or cases. In our situation here with Frozen Delight, we are going to have a unit be a gallon of ice cream. The mixing department has to be accountable for 65 gallons of direct materials during July. So they started on July 1st with 5,000 gallons. They received from the materials 60,000 materials for 60,000 gallons. So the total units they need to account for are the 65,000 gallons. For July, there are going to be 3 groups that are assigned costs. Group 1 is the beginning WIP inventory, what they began the month with. Then Group 2 are the gallons that were started and completed during July. Then Group 3 are the gallons that are in WIP as of July 31st. So Group 1 are the 5,000 gallons. Now they were in WIP, the 5,000 gallons. Those, of course, got completed in July. They were work in process as of July 1st. And then Group 2 is how much was started and completed, which you see that's 57,000 gallons. And 62,000 gallons were transferred out of the department into the packaging department. And then the Group 3 is the WIP, inventory, work in process, at the end of the month, which is the 3,000 gallons. So the 65,000 gallons is what we need to account for. We need to account for the beginning WIP, what was started and completed, and then the inventory at the end of the month. So this slide here shows that these groups of units, which we call gallons, in the mixing department for July, the 5,000 gallons of beginning inventory were completed and transferred out to the packaging department. And then during July, 60,000 gallons of materials were started. They went into the mixing department. Of those 60,000 gallons that were started in July, 3,000 gallons were not completed by July 31st. So we know 57,000 gallons were then started and completed in July. The total gallons to be assigned costs are 65,000 gallons. That equals the total gallons that the mixing department must be accountable for. Okay? Because the material costs are all added at the beginning of the process, we know the material costs are 100% complete for the 1,000-gallon batch of ice cream. So the whole units and equivalent units for materials cost are 1,000 gallons. However, because the batch is only 40% complete as to conversion cost, the equivalent units for conversion costs are only 400 gallons. Here, this slide shows the whole units for the three groups of units determined back in step 1 are listed here on the first column. The percent of materials added in July is then listed. The equivalent units are determined by multiplying the whole units by the percent of materials added. This slide shows the July 1st inventory of Group 1 has 5,000 gallons of whole units, which are complete as to materials, because remember, the materials get put in right away. That means the direct materials for the 5,000 gallons in process on July 1st were added in June. So the percentage of materials added in July is 0. And the equivalent units added in July are 0. The 57,000 gallons started and completed in July, the Group 2, are 100% complete as to materials. So the equivalent units of material costs for the gallons started and completed in July are the 57,000 gallons at 100%. But the 3,000 gallons in process on July 31st, this is the Group 3, they're also 100% complete as to materials because all the materials get added at the very beginning of the process. So the equivalent units for the inventory in process on July 31st are 3,000 at 100%, 3,000 gallons. The whole units for the three groups of units determined in step 1 are shown in the first column. The percent of conversion cost added in July is then listed. The equivalent units are determined by multiplying the whole units by the percent of the conversion costs added. Now this slide here shows that the July 1st inventory has 5,000 gallons of whole units, which is Group 1. Those are 70% complete as to conversion costs. So during July, the remaining 30%, so if everything's at 100% conversion costs and 70% of those conversion costs already occurred in June, that means in July we've got 30% to go. 30% of those conversion costs were added in July. So the equivalent units of conversion costs added in July are going to be 1,500, the 5,000 gallons times 30%. The 57,000 gallons started and completed in July. That group 2 are 100% complete as to conversion costs. So the equivalent units of conversion costs for the gallons started and completed in July are going to be 57,000. 57,000 gallons at 100%. The 3,000 gallons in process, the group 3, show they're 25% complete as to conversion costs. So here the equivalent units for the inventory in process at the very end of the month is going to be 750 gallons, and we calculate that by 3,000 gallons at 25% complete for conversion costs. Here we're showing the cost per equivalent unit. So the cost per equivalent unit for the direct materials and conversion cost is computed as you can see here. The direct material cost would be the total direct material cost for the entire period, divided that by our total equivalent units of direct materials. For conversion costs, it's the total conversion cost for the period, divided that by our total equivalent units of conversion costs. The July direct materials and conversion costs units for Frozen Delights mixing department is shown here. Remember, the direct materials were already added the previous month, so 0 for direct materials, $1,500 for conversion costs. That group 2 started and completed, we've got 57,000 for both. Then for the group 3, we show the inventory per direct materials. But then for conversion costs, because that was just a percent completed, 25% completed, we've got $750. So total gallons to be assigned cost, 750 gallons, I'm sorry. So we need for direct materials to assign cost of 60,000 gallons. And for the conversion units, we're going to assign costs for 59,250 gallons. So the direct material and conversion costs, you see, we've got 66,000 for materials. For the conversion costs, we have our direct labor and our factory overhead. So our total product costs for this department in July is $83,775. Now, the costs per equivalent unit are used in step 4 to be able to allocate the direct materials and conversion costs to the completed and to the partially completed units. As you see here, the direct material and conversion costs per equivalent unit are $1.10, and that's for the direct materials, and for the conversion costs, 30 cents per gallon. Here you see how it's calculated. If our total materials are at 66,000 and we have 60,000 gallons of related to materials, that would be $1.10 per gallon. For conversion costs, we have $17,775 of conversion costs, and the amount of gallons we need to assign, 59,250 gallons. So for conversion purposes, it's 30 cents per gallon. Product costs must be allocated to the units that get transferred out, but also to those that are partially completed that are still on hand at the end of the period. So the total production cost to be assigned for Frozen Delight in July are $90,000. We start with the direct material cost for 5,000 gallons. We show the conversion costs at the very beginning of the period that we're starting the month with at 70% completed. So we have our total inventory on July 1st of $6,225. The costs added during July, the $66,000 in materials, the $10,500 in labor, and the factory overhead of $7,275 gives us the total costs that were incurred in July. It all totals up to $90,000. So we've got the 65,000 gallon whole units, and we've got the total cost we need to account for is $90,000. So, as shown here, $6,225 of the cost of the July 1st in-process inventory of 5,000 gallons was carried over from June. This cost, plus the cost of completing the 5,000 gallons in July, was transferred to the packaging department during July. The cost of completing the 5,000 gallons during July is $450. The $450 represents the conversion costs only that were necessary to complete that 30% remaining of these gallons. Since there weren't any direct materials added in July, because remember they get added right away in June, because of the material costs were all added in June, there is nothing for direct materials for the beginning here in July. So the cost of the 5,000 gallons in process on July 1st gets transferred to the packaging department, and that total amount is the $6,675. Now, for Group 2, here we've got the 57,000 units that were started and completed in July. So this is the whole Group 2, what was started and transferred. So 100% of the direct materials and 100% of the conversion costs all happened in July. The cost of the 57,000 gallons started and completed is $79,800. We've got 57,000 gallons at $1.10 per gallon for direct materials, and the conversion costs, the 57,000 gallons at 30 cents in conversion costs. So we take the 62,700 of materials, the 17,100 of conversion costs, and we arrive at our total cost of $79,800. Now, the total cost of the $86,475 that was transferred from the packaging department is the total of the beginning inventory cost and those units that were started and completed in July. The 3,000 gallons that were still work in process at the end of July, that Group 3, those had all the direct materials added, but only 25% of the conversion costs in July added. So the cost of these partially completed units is $3,525. And how we figure that is we know all 3,000 gallons had all the direct materials added. But since only 25% of the conversion cost happened in July, we've come up with the percentage of whole gallons that were completed. So 25% of the 3,000 gallons is 750 gallons times the cost of conversion of 30 cents gives our conversion cost $225. So the direct materials of $3,300 plus the conversion cost of $225 gives our total cost for our ending in process of $3,525. So do you see here the whole manufacturing costs are assigned Group 1, Group 2, Group 3. We account for all 65,000 gallons, and the total cost here is $90,000. So this cost of production report is prepared for each processing department at periodic intervals. This report summarizes the following production quantity and cost information. So the units for which the department is accountable and the disposition of those units. The production costs incurred by the department and the allocation of those costs between what was transferred out and what's partially completed. If we use these steps 1, 2, 3, and 4, the July cost of production report for Frozen Delights mixing department is shown here on this slide. During July, the mixing department was accountable for 65,000 gallons. Of these gallons, 62,000 of them were completed and transferred to the packaging department. But those remaining 3,000 gallons are partially completed and are part of the in-process inventory at the end of the month. The mixing department was responsible for $90,000 of production costs during July. The cost of goods transferred to the packaging department in July was $86,475, and those remaining $3,525 is part of the in-process inventory as of July 31st. So let's look at this question. Here, the number of units in production during a period, whether completed or not, is called. I'll give you a minute to look at that. Whole units. These are the number of units in production during the period. Doesn't matter if they're completed or not, they're whole units. The equivalent units of production is the portion of whole units that are completed with respect to materials or conversion. Remember, the conversion is going to be the direct labor and the factory overhead. Okay? So we're going to just do a bunch of exercises so you can just gain some insight into this process. This exercise, the converting department of Torn Company had 19,200 units in work in process at the beginning of the period, which were 35% complete. During the period, 86,400 units were completed and transferred to the packing department. There were 15,200 units in process at the end of the period, which were 60% complete. Direct materials are placed into the process at the beginning of production. Our job is to determine the number of equivalent units of production with respect to direct materials and with respect to conversion costs. So guys, with respect to direct materials, it's going to be 100% complete because they're put in at the very beginning of the process. So in order to figure this out, we know we start with the whole units, and then we'll break it down for the equivalent units. Now, guys, we know in terms of equivalent units in regards to direct materials, it's 100% because it told us it started at the beginning. The direct materials were added right away at the beginning. Because the inventory, as far as direct materials, nothing was added for the beginning inventory and process. But since going into the month, they were 35% completed, that would mean that during the month, the conversion costs would have been added at 65%. So those 19,200 whole units that started the month 35% completed, during the month, they had to add the 65%. So we take and we show equivalent units. The 19,200 times the 65% gives us equivalent units for conversion purposes of 12,480. The amounts that were started and completed, the 67,200, that came in and they were completed in full, direct materials and conversion. 86,400 were transferred to packaging. So those costs, of what was added during the month, 67,200 total gallons, or whatever the units are. And in terms of conversion costs, we would add the amount that happened during the month, the 12,480 for the beginning in process, plus the 67,200 units, gives us 79,680 units in terms of conversion costs, and equivalent units for direct materials is the 67,200. At the end of the period, the inventory that was in process was 15,200 units. In terms of materials, the entire 100%, 15,200 units were added for materials. During the month, they were 60% completed in terms of conversion costs. So that would be the 15,200 units at 60% completed, which would then give us the 15,200 times 60% is 9,100 equivalent units per conversion cost. So our total of 101,600 units in terms of direct materials, 82,400 equivalent units. In terms of conversion costs, the equivalent units would be 98,800. Okay? Here, this exercise, we're looking at two departments, the drawing department and the winding department. Data for the two departments of Gurley Industries for September of the current fiscal year are shown here. So we see basically what we started in the drawing department, the percent completed, and we see what was completed and transferred out of the drawing department and what was still sitting in the drawing department at the end of the month. And then what the winding department began with and what was completed and transferred out, and then the ending work in process. It tells us that production begins in the drawing department and finishes in the winding department. If all direct materials are placed in process at the beginning of production, determine the direct materials and conversion equivalent units of production for September for the drawing department and also for the winding department. So when we look at this slide here, we know the equivalent units pertaining to the inventory and process. In terms of direct materials, there are 0 equivalent units because all the direct materials were added in the previous month. In terms of conversion costs, since 38% of the conversion costs were added in the previous month, then that means 62% were added during this period. So the 40,000 units times the 62%, or you see the 100% minus the 38%, 24,800 are the equivalent units in terms of conversion. The amount started and completed is 560,000 for both materials and conversion. So the entire 600,000 was transferred to the next department. For equivalent units, that's 560,000 for direct materials. And for the conversion, we would add these two, 584,800 in terms of conversion cost. Now what's remaining, the inventory remaining at the end of the month, remember the direct materials get put in right away. So in terms of equivalent units, 52,000 equivalent units of direct materials have been added, and 70% complete in regards to the conversion costs. So these 52,000 units, 70% complete, would be 36,400 equivalent units in regards to conversion. So we've got 652,000 units we account for in this department. The equivalent units for direct materials would be the 560,000 units plus the 52,000 units at ending in process, or 612,000 units in terms of direct materials. In terms of conversion, it would be the 24,800 plus the 560,000 plus the 36,400 is the 621,200. Whoops, let me see. 621,200. Now, for the winding department, we show that the beginning inventory and process, 12,000 units, and it was 35% complete. So the way we'll know equivalent units, the 65% would be what occurred during this month. So 12,000 units at 65% complete, 7,800 equivalent units. The 591,000 were the amount of units that were accounted for during the period that were transferred out in that they need to account for. So those that were started and completed during the period would be 579,000. And we've got the 579 in terms of direct materials and in terms of conversion. That sitting in ending inventory or inventory in process at 60% completed would be the 21,000 at times 60%. So equivalent units in terms of direct materials is 600,000 units. Equivalent units in terms of conversion would be the 7,800 plus the 579,000 plus the 12,600. Here we're going to look at exercise 3.7. This information concerns production in the baking department for the month of August. All direct materials are placed in process at the beginning of production. We're going to determine the number of units in work in process inventory at August 31st and determine the equivalent units of production for direct materials and conversion costs in August. So here we've got the units. So August 1st, we see a balance of 36,000 units, 3/4 complete. And we have a beginning balance for those units of 207,360. Then in August, we added direct materials for 200,000 units, $450,000 we added to the account for those direct materials. We show our direct labor, we show our factory overhead, and then we show 196,000 units were transferred out. We show a credit there of $1,361,660. And then we have an ending balance, and we need to figure out what we're showing that to be in our ending in process. So we've got this information. How many number of units in work in process as of August 31st? We see here we began with 36,000 units. We added 200,000 units during the period. We know we transferred out 196,000 units. So we have to have 40,000 units of work in process at the end of the month. Now, in terms of determining the equivalent units of production, we can see that we started with 36,000 units. In terms of material, they were added the month before, but in terms of conversion, if they were 75% completed, then that means during this period, we had to add 25%. So 36,000 units at 25% conversion would be 9,000 units. If we started and completed 160,000 units, the reason we know it's 160,000 units is we know we transferred out 196. So the 196 minus what we started with shows what we started and transferred out during the period, 160,000 units. We know we transferred out 196. In terms of direct materials, we have 160,000. In terms of conversion, it would be the 9,000 and the 160. If our inventory at the end is 50% completed in terms of conversion, then equivalent units would be 20,000 units. And of course, we know that the direct materials would be put in right away. So our total whole units would be the 36,000 plus the 160, gives us the 196 plus the 40,000, or 236,000 units. In terms of direct materials, it's going to be 200,000 units. And in terms of conversion, it's going to be the 9,000 plus the 160 plus the 20,000. Okay. This exercise, and hopefully I don't have any numbers wrong. I've had to correct them as I've seen me do something wrong here. The charges to work in process in the assembly department for a period, together with information concerning production, is shown here. All direct materials are placed in process at the beginning of production. We've got, in terms of the assembly department, 30,000 units that we began with, 40% completed. Okay. We've got Direct materials, 400,000 units, and we see it $11.25 per unit. We've got direct labor, 4,012,000, and we've got our factory overhead. It shows us what was transferred over to finished goods, the 406,000. So we need to determine the number of units in work in process at the end of the period. We need to figure out the equivalent units of production for the direct materials and conversion, cost per equivalent unit for the direct materials and conversion, and then the cost of the units started and completed during the period. So the number of units in work in process at the end of the period, we know we started with 30,000 units. We know we placed into production 400,000 units. So units finished during the period are 406,000. Therefore, our units in process at the end of the period need to be 24,000, because we see we have the units in process of 30 at the beginning plus the 400 we put in. That's 430,000. If we transferred out 406,000 during the period, you see it went to finished goods. We know we had to have 24,000 units in work in process at the end of the period. Now we need to determine the equivalent units of production for direct materials and conversion. At the beginning of the period, in terms of direct materials for the inventory and process, those direct materials were put in the month before. And the month before, they were at 40% complete. So we know during the month, 60% of conversion occurred. So our 30,000 units at 60% would give us 18,000 equivalent units. Started and completed during the period would be 376,000 units, because we know we transferred out 406. So 376,000 units had to be added, and all of those were complete in terms of materials and conversion. And at the end of the period, we're sitting with 24,000 units. And that was complete as to direct materials, but for conversion, it says they were 30% complete. So 24,000 at 30% complete would be 7,200 equivalent units. So in terms of conversion units, we have the 18,000 plus the 376 plus the 7,200. In terms of direct materials, we have the 376 plus the 24,000. Cost per equivalent unit. We know the total cost for the period put in was 4,500,000. It told us. And if we take the 400,000 equivalent units in terms of direct materials, which we see right here, 400,000 units, that would be at $11.25 per unit. In terms of conversion, if we look at the costs, we know the 401,200 were equivalent units in terms of conversion. And we see our factory overhead and our direct labor of 24,072,000. Am I saying it right? Yep, 24,072,000. Divide that by our equivalent units of conversion, gives us our $60. cost per equivalent unit. Cost of the unit started and completed during the period. We would have the $11.25 materials plus the $60, should be $60.99 here. I think I did this wrong, guys. Sorry about that. Times the 376,000 units that were completed during the period would give us the $26,790,000. Okay? This should be $60.99 because that's the cost per equivalent unit of the conversion cost. Here, NAPCO Refining Company processes gasoline. On June 1st of the current year, 6,400 units were 3/5 completed in the blending department. During June, 55,000 units entered the blending department from the refining department. During June, the units in process at the beginning of the month were completed. Of the 55,000 units entering the department, all were completed except 5,200 units that were 1/5 completed. The equivalent units for conversion costs for June for the blending department were computed as follows. So we show to the process units in inventory on June 1st, we had 6,400 units, 3/5 completed. 2 process units started and completed in June, we had 55,000 units minus the 6,400 we started with would be the 48,600. And then at the end of the period, it said we had 5,200 that were 1/5 completed. 5,200, 1/5 completed would be the 1,040 units. Okay, equivalent units of production would be the total 53,480. List the errors in the computation of equivalent units for conversion costs. Well, guys, think about it. If the inventory to begin with had been 3/5 completed the previous month, then that should only be 2/5 what we do in the current month. So here it will show you. In computing the equivalent units for conversion costs, the 6,400 units are multiplied by 3/5. That was the error. They should be multiplied by 2/5, which is the portion of the work completed in June. So the equivalent units should be the 2,560, which is the 6,400 times 2/5. Okay? In computing the equivalent units for conversion cost for units started and completed in June, the June 1st inventory of 6,400 units rather than the June 30th inventory of 5,200 units was subtracted from 55,000 units started in the department during June. Therefore, the equivalent units started and completed should be the 49,800 instead of the 48,600. Then the correct equivalent units for conversion costs should be 53,400 instead of the 53,480. The way we do that is we take the 6,400 times 2/5, the 55,000 minus the 5,200 units, because we have to go with equivalent units. The ending June 30th is the 5,200 times 1/5 for a total of 53,400. Okay. Cost per equivalent unit. The following information concerns production in the forging department for June. All direct materials are placed into the process at the beginning of production, and conversion costs are incurred evenly throughout the process. The beginning inventory consists of 18,000 of direct materials. Determine the number of units transferred to the next department and the cost per equivalent unit of materials and conversion. And then determine the cost of units started and completed in June. So the number of units transferred to the next department, we started with 1,800. We added 25,800 units. And if we transferred 2,800 units, or excuse me, if we had 2,800 units still in process at the end of the period, then those goods that were transferred would be the 1,800 plus the 25,800 minus our ending inventory. So 24,800 units would have been transferred. Determine the cost per equivalent unit of direct materials and conversion. Here we've got we start with our inventory in process at the beginning. We know they were 60% completed going in, so 40% completed during the month. We know what we started and completed during the period. We know what we transferred to the next department. We know what was on hand at the end of the period. So we have 27,600 total whole units. In terms of direct material, it was 25,800 units. And in terms of conversion, it was 25,680 units. So we need to figure out our equivalent units. Then we take our costs and we divide that by the equivalent units for direct materials and then the equivalent units for conversion from this previous slide, the 25,800 and the 25,680. We see here our direct materials. We see our conversion cost, which will be our direct labor and our manufacturing factory overhead. And that's how we calculate the cost per equivalent unit. Determine the cost of units started and completed in June. It would be 23,000 units times the equivalent cost per unit of direct materials and of conversion costs, 289,800. Now we're going to look at our next objective here. This next scenario talks about the journal entries that we will provide that we need for process costing. So the journal entries to record frozen delights, cost flows, and July transactions for process costing are shown in this form. In this scenario, we are talking about the various purchase of materials. Here we're showing we purchased materials including milk, cream, sugar, and packaging, and indirect materials on account for 88,000. So you see here we debit our materials and we credit our accounts payable for 88,000. Next, Next, we show the mixing department requisitioned milk, cream, and sugar for $66,000. This is the total amount from the original July information. Packaging material of $8,000 were requisitioned from the packaging department. Indirect materials for the mixing and packaging departments were $4,125, $125,000, and $3,000 respectively. So we would show here a debit to work in process mixing for the $66,000, a debit to the work in process for packaging of $8,000, then a factory overhead of mixing for $4,125, and a factory overhead for packaging of $3,000. And we would credit materials for the whole amount. Then it says we incurred direct labor in the mixing and packaging departments of $10,500 and $12,000. We would debit our work in process mixing for the $10,500, debit our work in process for packaging of $12,000, and we would credit our wages payable. We recognized equipment depreciation for the mixing and packaging departments of $3,350 and $1,000 respectively. That would be part of our factory overhead. We would debit the factory overhead mixing for the $3,350. We would debit our factory overhead for packaging of $1,000, and we would credit our accumulated depreciation on equipment. Then we applied our factory overhead to mixing and packaging departments, $7,275 and $3,500. So we would debit our work in process mixing for the $7,275, debit our work in process packaging for the $3,500, and credit our factory overhead. Remember, when we apply factory overhead to the jobs, the factory overhead gets credited and the work in process is debited. Now we transferred costs of $86,475 from the mixing department to the packaging department per the cost of production report. We would debit our work in process packaging, $86,475. We'd credit the mixing. It's going from the mixing into packaging. When we transferred goods of $106,000 out of packaging to finished goods, we would debit our finished goods ice cream. We would credit our work in process packaging. And then when we sold the goods for $107,000, we're going to debit our cost of goods sold and credit our finished goods ice cream. This slide here shows the flow of costs for each of these transactions. The highlighted amounts were determined from assigning the cost in the mixing department. These amounts were computed and are shown in the bottom of the cost of production report for the mixing department. Also, the highlighted amount transferred out of the packaging department to finished goods would have also been determined from a cost of production report for the packaging department. Let's look at another question here. Pine tree manufacturing uses a process costing system in its production. During the past month, it transferred completed goods of $95,000 ready to be sold out of the final assembly department per its cost of production report. Which of the following would be the proper transaction to record this situation? Would we debit our work in process final assembly and credit our finished goods? Would we debit our cost of goods sold and credit finished goods? Would we debit our finished goods and credit our work in process final assembly? Yes, of course we would, because we're getting it out of final assembly and putting it into finished goods. Okay? When goods are completed and ready to be sold, they get removed from the work in process with a credit, and they get added to the finished goods inventory with a debit. Let's look at some problems here. Okay? So here we've got entries to record these various transactions. So here we've got the Hershey Company manufactures chocolate confectionery products. The three largest raw materials are cocoa, sugar, and dehydrated milk. These raw materials first go into the blending department. The blended products then sent to the molding department where the candy bars are formed. The candies then sent to the packing department where the bars are wrapped and boxed. And the boxed candies then sent to the distribution center where it gets sold. Show the accounts debited and credited for each of the following business events. So the first, the materials used in the blending department. We would debit our work in process for the blending, and we credit our cocoa material, our sugar, and our dehydrated milk. They all come from the materials inventory. When we transfer the blended product to the molding department, remember wherever we are transferring it from is credited, and where it's going to is debited. Again, think of an inventory as an asset. To increase the asset, we debit it. To decrease it, we credit it. When we transfer the chocolate to the packaging department, we're going to credit the molding department. We'll debit the packaging department, and the department right before packing is the molding department. When we transfer the boxed chocolates to the distribution center, we're going to debit our finished goods, and we credit our packing department. And then when we sell them, we're going to debit our cost of goods sold and credit our finished goods. Here, Keone manufactures a sugar product by a continuous process involving 3 production departments: refining, sifting, and packing. Assume that records indicate that direct materials, direct labor, and applied factory overhead for the first department, refining, were $900,000. For the direct materials, $375,000 for the direct labor, and $2,860,000 for applied factory overhead. Also, work in process in the refining department at the beginning of the period totaled $175,000, and work in process at the end of the period totaled $220,000. We're going to journalize these entries to show the flow of cost into the refining department during the period for the 3 items, and then also show the transfer of production costs to the second department. So we'll work in process refining department, $900,000, we credit materials. For the labor, we debit our work in process refining department, we credit our wages payable. And then our applied factory overhead, we debit our work in process and we credit our factory overhead. Then to transfer it to the next department, we're going to debit the sifting work in process sifting department, and we credit the work in process refining department. So we'll add all the costs, the $175 plus the $900 plus the $375 plus the $2,860,000. Now remember, we started the period with $175,000. That's why when we transferred out, we have to also include that. Now we're going to look at objective number 4. Here we've got the cost of production report is often used by managers for looking at how the conversion and direct material cost, how it changes during periods. So Frozen Delight's cost of production report for the mixing department shows that beginning inventory is $6,225. The July 1st inventory in process of the $6,225 consists of the direct material cost of the 5,000 gallons and the conversion costs that were 70% complete of the 1,225. Using that information, the June cost per equivalent unit of materials and conversion costs can be determined here. We show the direct materials per equivalent unit. The $5,000 divided by 5,000 gallons gives us $1 a gallon. For conversion cost, we take the $1,225, which is the 70% of the gallons. Let me just confirm what I'm trying to say here. Because they were 70% completed, so the 1,225 divided by the 70% of the 5,000 gallons gives us 35 cents per gallon of conversion costs. In July, the cost per equivalent unit of the materials increased by 10 cents per gallon, while the cost per equivalent unit for conversion costs went down 5 cents per gallon. And we see it by, in July, cost per equivalent unit for direct materials was $1.10. In June, it was $1. But the cost per equivalent units in June was 35 cents, in July was 30 cents. Frozen Delight's management could use the preceding analysis as a basis for investigating what happened. What was the increase in direct materials? And what's the decrease in the conversion costs per equivalent unit? So the cost of production report is often used by managers for analyzing the change in the conversion and direct materials costs per, is it whole units? It's equivalent units, isn't it? The change in the conversion and direct material cost always are related per equivalent units. So here's a problem we're going to look at. The debits to work in process for the roasting department for Morning Brew coffee for August with other information is shown here. We've got our work in process at the beginning of the month of August, 700 pounds, 20% were completed. Then we've got our direct materials, the 700 pounds times 470. The conversion, remember 20% completed, $1.35 gives us the $189. So we've got our total cost coming into the period. We see that our coffee beans added during August were 14,300 pounds. Our conversion cost during August gives us the 21,942. Our work in process at the end of the month, they tell us are 400 pounds, 42% completed. And they tell us that the goods finished during August are 14,600 pounds. So we need to take this information and prepare a production report. And they want the direct material and conversion equivalent units, the direct material and conversion costs per equivalent unit, the cost of goods finished, the cost of work in process at August 31st. And then we need to compute and evaluate any changes. So we see what we had in costs to start the month with, and then what happened in August. So this report shows us we started the month with 700 units. we received during the month storeroom materials of 14,300 pounds. So we have the 14,300 pounds plus what we began the month with, 700 pounds, to come up with 15,000 pounds. We know that we started with 700 pounds. For conversion purposes, they were 20% complete. So what were the equivalent units during the month? We have to say 700 pounds times 80% complete, which would be 560 units. We started and completed during the period, 14,300 units minus the 400 units that are on hand at the end of the period. So we started and completed really 13,900 units, because we need to be aware of total units to be accounted for as the 15,000 units. And we know that if we had 400 units on hand at the end of the period, and we had 700 units on hand at the beginning of the period, we have to account for the entire 15,000. So we know we started and completed the 13,900, which is basically the 14,300 units minus the 400 units that are still sitting at the end of the period. And for purposes of the conversion at the end of the period, if they were 42% complete, the 400 units times 42% would give us the 168 units. Now, preparing a cost of production report, we have to show the direct materials for August in roasting was 65,780. The conversion cost, 21,942, because they told us the conversion amounts. We know our equivalent units from the previous slide, 14,300 and 14,628. And this gives us our cost per equivalent unit, 460 and 150. We assign costs at the beginning of the month, inventory and process, the costs that were incurred during the month. Here, the cost incurred during the month, the 65,780 plus the 21,942 are our cost incurred. So what we started the month with plus the costs that were brought in are all the costs that we need to be accounted for. Cost allocated to complete and partially completed units at the beginning was $34.79. To complete inventory and process, we had to look at the 560 units at $1.50 that we see right here, the cost per equivalent unit. So cost of completed August 1st work in process is the $43.19. What was started and completed in August, here we've got the 13,900 units that we had from the previous slide times the cost per equivalent unit of $4.60. And for conversion costs, the 13,900 times the cost of conversion 150. And then what was sitting on hand at the end of the period, we've got our 500 units in terms of materials, and then the equivalent units for conversion, the 168 units at $1.50. Okay, so we accounted for all the $91,000 in costs, what we started the period with, and what was brought in, the costs brought in. And here's how we can show exactly where they all line up. Compute and evaluate the change in the cost per equivalent unit for direct materials and conversion from the previous month. Well, the materials from the current period are at $460. From beginning inventory, they were sitting at $470, so they've gone down 10 cents. But the conversion costs have gone up 15 cents. Management might want to see what's happening, why that's occurred. Here we have another cost of production report, exercise 317. So the cutting department of Karachi Carpet Company provides the following information for January. Assume that all materials are added at the beginning of the process. So we've got work in process as of January 1st, 1,400 units, and we know they were 75% completed. Going into the period, we know our direct materials and our conversion costs. We then see what materials were added, and 58,000 units were brought in from the weaving department to the cutting department. We know our direct labor and our factory overhead that was applied. And then we know the goods finished during January includes goods in process of January 1st to be 56,200 units. And then at the end of January, we have 3,200 units with conversion costs being 30% completed. So it's given us everything we need to prepare this production report. So the first thing we do is we show the units that we began with, 1,400 units. We received 58,000 units in from the weaving department, so we have to account for 59,400 units. Of those 59,400 units, we know we completed and started 54.8 because we had 1,400 that we started with. And we know we had 3,200 that were sitting in the ending inventory. So the started and completed, we've got the 58,000 units minus our ending inventory. And as far as the ending work in process for conversion purposes, if we had 3,200 sitting at the end, but they were 30% completed in regards to conversion, we know that's 960 units, okay? So it gives us our total units. We need to do that first in order to then be able to assign direct materials per equivalent unit and conversion costs per equivalent unit. So now we show the direct materials that came in during the period of 742,400. We show our conversion costs, the direct labor and the factory overhead. And we take our equivalent units from the previous page. The 56,110 are the conversion equivalent units, the direct material equivalent units, 58,000. See how we're dividing those by the cost to come up with cost per equivalent unit, 1,280 for direct materials, 510 for conversion. Okay? So we show what we began the period with, what we added during the period, the total cost that we added to show everything available. And then again, here are our costs we began with. Here's the 350 units at $510. That's the portion of conversion cost we charged to the beginning work in process that still needed to be completed. What we started and completed in January, and then what was sitting on hand at the end of the period. So we know in terms of the total cost that was brought in during the month, those had to be those that began and were transferred out during the period, and those that are still sitting in the ending inventory in process. So the total accounts cost to be accounted for, you see, we balance based on everything from the beginning inventory, what was transferred out, and what's sitting in work in process at the end. Compute and evaluate changes in the cost per equivalent unit for direct materials and conversion. Well, we know that our direct materials at the beginning was $12.65, and now they're sitting at $12.80 here. As you can see right here, they're sitting at $12.80. Our conversion costs started at $5, now they're at $5.10. So everything went up. The cost per equivalent unit of materials went up by 15 cents, and the cost per equivalent unit of conversion costs increased by 10 cents. Here, AccuBlade cast blades for turbine engines. Within the casting department, it's melted into a crucible and then poured into molds to produce the castings. On May 1st, there were 230 pounds of alloy in process, which were 60% complete as to the conversion. The work in process balance for these 230 pounds was $32,844. And it shows how we figured it out, the direct materials and then the conversion. During May, the casting department was charged $350,000 for 2,500 pounds of alloy and $19,840 for direct labor. Factory overheads applied to the department at a rate of 150% of direct labor. The department transferred out 2,530 pounds of finished castings to the machining department. The May 31st inventory in process was 44% complete as to conversion. We're going to journalize these entries. So you see what came into the casting department from materials. It says $350,000. So we debit our work in process casting department, credit our materials for $350,000. We show we had the wages payable of $19,840, and our factory overhead is 150% of direct labor. So 150% of 1940s are $29,760 factory overhead applied. So we take our wages and our applied factory overhead, debit that to our casting department. Then we need to take and transfer this to the machining department from the casting department. And we can basically show the $402,684 that we are transferring based on what we began the period with, up here the $32,844, plus the amount it cost us to complete that May inventory, the May 1st job, the 92 pounds at $20, and then what we started with during the period, the 2,300 pounds, times our $140 and our $20. So that's how we come up with what was transferred off to the machining department. In order to support this, we've got our cost of materials, the $350,000. Divide that by our equivalent units, gives us $140 per pound. And the conversion, the labor and the overhead divided by our equivalent units, 2,480 of equivalent units, there is $20 per pound. Now, the $29,760, that, let me just see what we're talking about here, $29,760 factory overhead here. We've got the direct materials. We've got the conversion to give us our $29,760 here sitting in our factory overhead. Or you could take these figures here to balance it the same way. We've got materials. Now we're paying $140 per equivalent unit, where the previous period it was at $132, so it's gone up $8. And our conversion costs have also gone up $2. Something that management would be interested in seeing. I've got a couple more here. I'm going to just do this. Here we've got some information regarding Lighthouse Paper Company, manufactures newsprint. 2 departments, paper making and converting. Pulp is first placed in a vessel, and at the beginning of the paper making production, and the following information shows the production in the paper making department. So what we began the period with, what we added in materials, labor, factory overhead, what was transferred out, and what was still on hand at the end of the period. We need to journalize the various transactions and then look at the balances. So here we show we would debit our work in process paper making and credit our materials pulp for the $330,750. We would also show our work in process into the paper making department, take our labor of $40,560 and our factory overhead here of $54,795. Now, when we take it out of the paper making department and we put it into the we transfer it into the converting department, it shows we transferred out 103,900 units. Okay? We figure we started the period with $9,139. In order to complete that inventory, you see it was 35% completed, so we have another 65% to show in this process. And we'll look at it on the next slide, but that cost was $1,521 in order to complete that portion. The pound started and completed in March. We started, we have units of 105,000, but we have in ending inventory 3,700 at the end of the period. So 101,300 units were started and transferred out during the period. Okay? So if we show the amounts that were started and transferred out, here will be our cost per equivalent unit, which we'll look at, the $3.15 in materials and the conversion cost of 90 cents during the period. So these are the costs that were transferred out. Here is how you see we needed to know the equivalent units. We take all of our costs and we, in terms of materials, we take our 330,750, divide that by our equivalent units of 105,000 to get the $3.15 per unit of materials. For conversion, we take our direct labor, factory overhead, divide that by our equivalent units of conversion units, 105,950, to come up with our cost per equivalent unit of conversion there. Determine the work in process at the end of the period. Well, we've got 3,700 units times the materials of 315. We've got 3,700 units, 80% complete, times the conversion cost per unit of 90 cents, gives us the 2664. So we've got 14,319 in the cost on hand at the end of the period. We're going to look at this exercise. Madison Electric Company uses a fossil fuel plant for generating electricity. The facility can generate 900 megawatts per hour. The plant operates 600 hours during March. Electricity is used as it is generated, so there's no beginning or ending inventories for the period. The March conversion and fuel cost are shown here. Conversion cost $40,500,000, fuel $10,800,000. Madison also has a wind farm that can generate 100 megawatts per hour. The wind farm receives sufficient wind to run 300 hours for March. The March conversion costs for the wind farm, mainly depreciation, are shown here, $2,700,000. Determine the cost per megawatt hour for the fossil fuel plant and the wind farm, which is the lowest cost facility. Why are equivalent units in production not needed in determining the cost per megawatt hour? Well, because they don't have beginning or ending work in process. And what advantage does the fossil fuel plant have over the wind farm? So let's look here at the cost per megawatt hour for the fossil fuel farm. We have our $51,300,000 in cost. We take our megawatts times the number of hours, gives us 540,000 megawatt hours. If we take our 51,300,000 divided by our 540 megawatt hours, we get $95 per megawatt hour. With the wind farm, we've got our $2,700,000 in costs, and we've got the 100 megawatts times 300 hours gives us 30,000 megawatt hours, which is $90 per megawatt hour. So the wind farm is $5 cheaper per megawatt hour. Again, no need for equivalent units because there's no beginning or ending inventories that are partially completed. What advantage does the coal plant have over the wind farm? Well, the wind farm has definite cost advantage. However, a wind farm needs wind. So the wind farm isn't going to be as reliable as the coal plant for generating electricity. The coal plant can be turned off and on a schedule. The wind farm is up to the conditions nature provides. We're going to look at one of the final items here. Analysis for decision making. Costs of production reports may be prepared showing more than direct materials and conversion costs, which help managers look at issues and find ways for improvement. So in this case, Holland Beverage Company's blending department had no beginning or ending work in process in April or May. All units started were completed in each month. The cost of production reports showing multiple cost categories for April and May in the blending department are shown here. The reports indicate that total unit costs have increased in May from 50 cents to 53 cents, a 6% rise. To determine the possible causes, the cost of production report are restated in per unit terms by dividing the cost by the number of units completed. So these cost of production reports can be used to compare the material output quantity to the material's input quantity. Dividing the output quantities by the input quantities is termed the yield of a process. Often there are materials that are lost from waste that will cause the material's output to be less than the material's input into a process. These material losses can be investigated to improve the efficiency in using materials. The weighted average inventory cost flow method is going to be illustrated here in the S&W Ice Cream Company. This one's kind of similar to Frozen Delight. Like Frozen Delight, the S&W mixes direct materials in refrigerated vats and has two manufacturing departments, mixing and packaging. The manufacturing data for the mixing department for July is shown here. The beginning inventory in process, 5,000 gallons, started the month 70% completed. And then direct materials were put in of 66,000. Direct labor, 10.5. Factory overhead applied, 6,405 for total costs to be accounted for during the month. We need to figure out cost of goods transferred to packaging in July. And that, of course, includes the beginning units in process. Okay? So, and then the cost of work in process at the end of the period. So, cost of goods transferred to packaging is 62,000 gallons. Using the weighted average method, the goal is to allocate the total cost of production of 89,105 to the 62,000 gallons completed and transferred and the 3,000 gallons on hand at the end of the month. The cost of production report has those steps: determine the units to be assigned, the cost to compute equivalent units, determine the cost per equivalent unit, and then allocate costs to transferred out and those partially completed units at the end of the period. So the first step is to determine the units to be assigned cost. A unit can be any measure, tons, gallons. In this case, it's going to be a gallon. S&W's mixing department had 65,000 gallons of direct materials to account for during July. The 5,000 on hand at the beginning of the month, plus the materials that were received of 60,000 gallons. The two groups we assign the cost to, the units that are completed and transferred out, and the units on hand at the end of the period. So this is a little different because in the previous example that we've done, we would have three groups. We would have the beginning units in process, then the units transferred out, or the units that were brought in and transferred out at the same time, and then the units on hand at the end. During July, the mixing department completed and transferred 62,000 gallons to the packaging department. Of the 60,000 gallons started in July, 57,000 were completed and transferred to the packaging department. So the ending work in process has 3,000 gallons. So we know the units transferred out are 62,000. The inventory at the end of the month is 3,000. So the total gallons to be accounted for are the 65,000 gallons. The 3,000 gallons of whole units of work in process for the mixing department on July 31st. Those units are 25% complete, so the equivalent units in process in the mixing department is 750 gallons. The units transferred to the packaging department have been completed, so whole units, the 62,000 gallons transferred, are the same as the equivalent units transferred. The total equivalent units of production for the mixing department are the 62,000 gallons completed and transferred, and the 750 equivalent units at the end of the period. So total equivalent units, 62,750. How do we determine the cost per equivalent unit? We take our total cost of $89,105, divide that by our 62,750 gallons to come up with our $1.42 cost per equivalent unit. Okay? The cost of transferred and partially completed units is determined by multiplying the cost per equivalent unit times the equivalent unit of production. For S&W's mixing department, these costs are transferred out to the packaging department, 62,000 gallons at $1.42, and in process at the end of the period, the 3,000 gallons at 25% times $1.42. So that's the total production cost that get assigned. The cost of production report using this weighted average method, you see we've got our whole units, we've got the units to be assigned, and we've got our equivalent units of production that are showing at the end of the period. When you see that inventory in process on July 31st at 25% complete. So you've got the step 3 shows the costs that get assigned to production will be what we began the period with, and then all the costs added in the month, which would total the $89,105. And you can allocate those costs by showing what was transferred to the next department times $1.42 and what's on hand at the end of the period times $1.42. This is a little easier method because you don't separate the materials and the conversion costs. So guys, that will do it for this chapter 3. Take care.